We're going to let this start up and get running here just for a little bit. Excellent, excellent. Looks like we're live. Good evening, everyone. My name is Jeremy Deysach, and I am a FICO certified credit coach with Credilife Financial Wellness. I'm also the founder of the free credit repair advice group right here on Facebook. And what I wanted to do, it's been a little bit since we've gone live. A lot of cool things have happened over at Credilife. There have been some big changes, all of them positive. And I wanted to reach out to all of you tonight and reconnect live, my favorite way to talk to everybody in the free credit repair advice group. So I wanted to reach out, talk to you all live. And, we've had some, like I said, we've had some big changes at Credilife recently. The biggest one, we have just partnered nationally with Exit Realty. We have become a national Exit Realty partner. And what does this mean for you? This means better access to real estate information, better access to home buying information, better access to not just free credit repair advice information, but also advice on home purchasing, the home buying process, what to do when it comes to that. So we're really excited about this brand new partnership that we've got with Exit Realty. I just met with them for a week down in Orlando, Florida. Absolutely exciting group of people, some of the coolest people I've ever met. Boy, it was a match for Credilife. We're a different kind of company. They're a different kind of company, and in the very best ways, we matched up. So, because of the nationwide connection we've now made with Exit Realty, I thought this would be a great time to talk to you all about home ownership. All right, let's talk about home ownership. Let's talk about how to get your credit mortgage ready, how to get your credit score and your credit profile in position for all the goals that you've got when it comes to home ownership. So we're going to let the room fill up just a little bit here. In the meantime, if you would like to have your own credit coach, if you'd like to hire Credilife to be your credit coaching team, just go to www.credilifevip.com. CredilifeVIP.com, and you can access our calendar directly, and that'll let you pick a day, an evening, or even a Saturday morning that works for you for an initial consultation at no cost. During the consultation, we'll talk about your goals. We'll find out what's going on with your credit, and we'll put together a plan and steps, action items, and get you enrolled in the correct services to get your score and profile in position for all your goals. So to book a consultation with a Credilife certified coach, just go to www.credilife, Credilife, VIP.com and pick your time. All right, so today we're going to talk about how to get your credit mortgage ready. All right, let's see. I have got the opportunity here. Let's see if we can do this. They are going to allow me to do a poll. Let's see if we can get this thing published up here. All right, we're going to activate this poll. I'm activating, in theory, a poll, and I have no idea how this works, where it works, why it works, etc. But in theory, there we go. We're going to show the results in the video and reopen the poll. All right, so I'm opening up a poll. That's what's in the upper right-hand corner. So if you'd like to answer my poll, just go to the upper right-hand corner and go ahead and click and answer the questions. But the poll, tonight's poll is this. What is your credit goal? Is it owning a home? Maybe buying a car? Getting my buying power back? Or saving money? So what I want to find out is I want to find out what's important to you, and I'm going to keep tabs on this poll and give you the results as the evening goes on here and as our live video goes on. So you can click in that upper right-hand corner. You're going to see a little, there we go. You're going to see an option there to, there we go, beautiful. It should be over the video right there. Excellent, excellent. So that's working. Cool. So we want to go ahead. I want to see, are you interested in owning a home? Are you interested in buying a car? Are you interested in getting your buying power back? Are you interested in saving money? So go ahead, put your vote in on that poll. It'll give me some insight into what you guys want to see now and in the future when it comes to our videos here. So Hey, I want to thank everyone for joining. Normally we advertise these videos, but I was like, you know what? Hey, guys, we haven't done one of these in a while. I wanted to jump in an impromptu way. And do me a favor, let me know you're here. Smash that like button. Give me some number ones in chat so that I know you're with me. So that I know you're watching. Give me some ones in chat. Smash that like button so I know you guys are watching. So tonight we're going to talk about how to get your credit mortgage ready. Now, why did I take this topic out of the blue? Well, one, I'm very excited about our new partnership with Exit Realty. I think that's extremely cool, a very neat group of people. But number two, we have found in past polling in the free credit repair advice group, with the 75,000 people here, we have found that people's primary goal in the free credit repair advice group, primary goal is buying a home. 95% of you, a full 95% of you have indicated that your goal is home ownership. So that's what we're going to talk about tonight. So in a moment, I am going to tell you what type of credit profile is required to get a mortgage. I'm going to tell you what blend of accounts you're going to want to have to get approved for a mortgage. And I'm going to tell you a couple of tricks that you can use to raise that score as quickly as possible, round out that profile, and get you in position for those goals. So that's what we're going to talk about tonight. So let's get started. Oh, by the way, the comment section right below here. I'm doing live Q&A as well. So if you have any credit questions, it could be about tonight's topic. It could be about, home ownership. It could be about obtaining a mortgage, what needs to be done, what type of profile they're looking for when it comes to your credit. Whatever question you've got, I want you to go ahead and throw that down in the comments section, and I'll answer that live for you. All right, so I promised you that the first thing we would talk about is the profile that is going to be looked for when you go to obtain a mortgage. All right, so if you are going for, there's a lot of different types of mortgages out there. There's Fannie Mae. Who's heard of that? Anyone here? Give me some number ones. Give me some thumbs up if you've heard of these things. There's Fannie Mae. There's Freddie Mac. There's FHA. There's VA mortgages. There's USDA mortgages. How many of you have heard of one of them? How many have heard of two? How many have heard of three? How many have heard of all of them? How many of you haven't heard of any of them? Let's see. All right, so when you go and apply for a mortgage, you fill out the paperwork, your name, your address, your telephone number, your date of birth, your social security number, your employer, how many years you've been on the job. You flip on the next page and you're listing your bank accounts and your 401k and all the things you have, all the money you got. On the other side, it's all the things you owe, your credit card payment, your car payment, student loans, all those things. What do you owe? What do you make? How do they balance out? You fill out all this information and you give it back to the mortgage company, to the loan officer. Now they're going to process that information, usually initially through a computer, through a system called DOLP, so desktop originator, loan prospector, or essentially automated underwriting AU. They're going to put it through automated underwriting. What automated underwriting is looking for is a basic credit profile from you. Now, the rules that the automated underwriting have go back to the original rules that manual underwriters have. Human beings, people who are telling you, yes, you may get a mortgage, or no, I'm sorry, thanks for playing, you don't qualify for a mortgage. We won't be giving you $200,000 today, okay? Now, there are still live underwriters. Okay, automated is for some quick yeses, but all of this stuff, all of these documents, everything does eventually have to be looked at by an underwriter. That's the person whose job it is to determine if you're getting a loan or not, a mortgage or not, okay? So with Fannie Mae and Freddie Mac and FHA and VA and USDA mortgages, these mortgage styles, they all have universal underwriting. They have underwriting that's across the board. If somebody's telling you, I can get you an FHA loan with this, but someone else is going, oh, I can do it at this. Okay, they can all get you the same thing. FHA guidelines are FHA guidelines are FHA guidelines. Same with conventional Fannie Mae, conventional Freddie Mac, VA, USDA. They all have the same set of consistent guidelines. So an approval from any of them is the same as an approval anywhere. Okay, that's something to keep in mind. Now, when it comes to mortgage guidelines, mortgage underwriters have to put together what's called a minimum trade line requirement. A minimum trade line requirement. So what's a trade line? A trade line is a line of credit. It's an account on your credit report, okay? That's a trade line. Do you have a credit card with Capital One you've been paying? Yes, that's a trade line. Do you have a student loan? That's another trade line. Do you have an auto loan? That's another trade line. Now, there happens to be a base profile, a base minimum trade line requirement for Fannie Mae, for FHA, for VA, for USDA, for Freddie Mac, for all of them. The minimum trade line requirement for all of these happens to be 2 revolving accounts. Those are credit cards. You can charge them up, you can pay them off, you can, use them again. As long as you're happy with the bank and the bank's happy with you, they'll revolve forever, right? So it's 2 revolving accounts. They want to see them open and active with a minimum 2-year history, okay? 2-year depth. They want to see 1 installment account. So what's an installment account? That's a loan where you make equal monthly payments until the loan is paid off. And once it's paid off, it's over. You can't go back to Ford Credit after you paid off your car and go, hey, now can I have another $900 to get a microwave? They'll say, no, clearly you don't understand how this works, right? So that's an installment loan. Your car loan, your student loan, a mortgage loan, those are installment loans. A self-lender, that is an installment loan, okay? So what these underwriters want to see is 2 revolving accounts open and active with a perfect payment history. 1 installment account open and active with a perfect payment history, and they'd like to see at least 24 months credit depth. Credit depth, now that's time. We can't do anything about time. We can do something sooner rather than later, but we can't actually directly impact time. I wish we could. And if I ever figure out how to, I'll go ahead and I'll tell you last week how I did it. So because we can't impact time, a lot of you are going, well, Jeremy, I don't have 2 years of perfect credit history. We're going to introduce to something, and this is one of the tricks I told you about. We're going to introduce something called a compensating factor. Now, if you've been in the free credit repair advice group for a while, or if you have been a client of Credilife for a while, you'll hear us preach that the base account requirement you want to have, the base trade line requirement, is 2 revolving accounts, credit cards, open and active with a perfect payment history. 1 installment account, like a self-lender, a car loan, open and active with a perfect payment history, and 1 retail account. That could be Fingerhut, it could be Target, it could be Best Buy, Home Depot, that could be your Amazon card. Why are we telling you you need a retail account when Fannie Mae, Freddie Mac, FHA, VA, and USDA underwriting is not asking for it? Why are we telling you that? Because if you don't have 2 years of credit depth, that underwriter needs to look for something else. They got to find something else. They got to find some love. They got to find a reason to say yes. And I promise you, they're looking for a reason to say yes to you. They are. They're not just, no, no, no. Someone's trying to blow. No, you're applying. No, 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 right? They're looking for that reason to say yes. And so if you've added on a retail account, something as simple as Fingerhut, maybe you bought a pair of tennis shoes and you showed that you could repay on that, right? If you have that on there, that's what's known as a compensating factor. And the underwriter can look and go, hey, they don't qualify. They've got 2 revolving accounts open and active with a perfect payment history. They've got 1 installment account open and active with a perfect payment history. They don't have 24 months of credit depth, okay? But they can say, even though they don't have 24 months of credit depth, look, they've managed this retail account perfectly. They were responsible in their spending. They were responsible in their payments. They showed the ability and willingness to repay in a timely fashion. That is now acting as your compensating factor, and that's a trick that can get you there, even if you have a shallow or a thin credit history. Does this make sense to anyone? Let me know. Give me some thumbs up. Give me some yeses. Give me some likes in chat. I want to know that this is important to you. If this is important to you, let me know. If this is important to you, this is your time to talk about it. All right. So we talked about the minimum trade line requirements for FHA, for VA, for USDA, for all of these different underwritings. Okay. Now, aside from a trade line requirement, you're going to have a decent score. The better your credit score, typically, the more you can qualify for, the more loan types you qualify for, and the lower rates you'll get. Okay. The more you qualify for and the lower rates. And you'll save money across the board. With a higher credit score, your mortgage insurance is less. With a higher credit score, your homeowner's insurance is less. Heck, your auto insurance is less. Your rates on your car are less, but we're talking about the house. So what do we do to maximize our point potential? What do we do to raise our credit scores to the max that we can possibly raise them to? Okay. Here we're going to talk about the FICO algorithm. This is this magical mathematical formula that determines your credit score. What's FICO? FICO is the scoring model used by 90+% of all lending institutions in the United States. It's also something that I'm certified in. Some of those things on the wall are FICO certifications. I've got a lot of things. A couple of them are FICO certs, okay? Now, within the FICO algorithm, the math formula that creates your FICO score, there are some perfect zones, some perfect regions, some perfect tips and tricks, some perfect utilizations you can do to maximize your point potential. The very first place you can make the fastest impact. Thank you. The fastest impact, the biggest impact in the FICO algorithm, that can be made in revolving accounts. We talked about revolving accounts, credit cards. You can charge them up, you can pay them down, you can pay them off, you can do it again. As long as you're happy with the bank and the bank is happy with you, that can revolve forever, can't it? All right. So your biggest impact that you can possibly have is going to be on credit cards, your revolving accounts. Now, the impact that you can have is by maintaining a good balance to limit ratio on those cards, okay? Balance is how much you spent on the card, how much you owe. That's the balance on the card. Limit is your credit limit, how much you're allowed to spend. So balance to limit ratio is the utilization. It's the percentage of the card's available credit that you used, okay? And now you may have heard all kinds of things throughout your life. There is so much information out there, and God bless them, bless their hearts, as I picked up in Florida, as they say in the South, bless their hearts. You've probably heard, and I want you to let me know this stuff, you guys. How many of you have heard that you're supposed to keep your cards under half? Give me some number ones in chat. Give me some love. How many of you have heard that you're supposed to keep your credit cards under 50% usage? Anyone? How many of you have heard you're supposed to keep your credit cards 30%? People love them some 30%. Just use 30% of your credit cards. Only use 30%. Use 30%. 30 is the magic number. You want to use 30%. How many? Give me some thumbs up, some love. Give me some hearts. Give me some number ones in chat if you've heard this. How many of you have heard, no, you don't want to do that. You only want to use 10%. 10% is where you want to use it. How many have heard 10%? How many of you have heard you should open your accounts but don't use them? Don't even use them. Just open them, let them sit there, don't use them. Give me some loves, give me some hearts, some hugs, give me some number ones in chat if this is something you've heard. And how many of you have heard, well, you can charge them up to what you want, but you pay them down right before a certain magic date in each month, and you only count as so much, and that's how you do your score? How many of you have heard that? All right, show of hands. Give me some love, some thumbs up, some ones in chat. How many of you have you heard one of these things? Have you heard multiples of these things? I tell you, if you heard multiples of these things, bless their hearts, we know they're not right. How could they be right if they're telling you multiple different things, right? Well, I'm going to say, again, bless their hearts, everyone who's told you this stuff. Now, they didn't tell it to you because they wanted to hurt you. They didn't tell it to you because they wanted to necessarily sound smart. They didn't tell it, they told it to you because maybe that's what they were taught. There's so much misinformation out there when it comes to credit. All right. Now, how many of you, give me a show of hands, how many of you would be interested in knowing what the perfect utilization is in the FICO algorithm to give you the most points in your score? How many of you would like to know the optimum, the pure, the perfect, the ultimate, the premium, the whatever you want to call it way? How many of you would like to know the best way to manage a credit card for utilization, to get the most points on your FICO score? How many would like to know that? Give me some thumbs up. Give me some loves. Give me some hugs. Know you got emoticons. Give me some thumbs up in chat. Give me some ones in chat. How many of you? All right. There is within the FICO algorithm a perfect zone, a perfect region, a perfect utilization that will add the most possible point potential to your score within that FICO algorithm. That amount, by the way, is comically small. It's tiny. It's teeny tiny. You're going to be like, what? And I'll be like, yeah. And you'll be like, what? I go, yeah. I go, what? I'll be like, yeah. All right. So the perfect usage, the perfect monthly spend, the perfect monthly trended average daily balance, the perfect monthly payment on your credit card, your revolving account, is 1 to 3% of the limit. 1 to 3% of the limit. I'm going to let that sink in for a sec. 1 to 3%. That means on a $300 limit, maybe a secured Capital One card or a secured Discover card or an Open Sky or a Merrick Bank, a Credit One, whatever card you've got. If it's got a $300 limit, that means a monthly spend, a monthly trended average daily balance, and a monthly payment of between $3 and $9. Between $3 and $9. Any more, you broke it. Any less, you broke it. All right. Any more than $9 and you broke it because you went outside the zone that adds the most points to your score every month. And if your goal is home ownership, you want to what? You want to add the most points to your score each and every month. Fair enough? Any less than 1% of that limit, and you broke it. Why? Because less than 1% utilization on your credit card is not considered activity. And you need activity to generate points. Okay? So here's the deal. Now I know this. Now you know this. Now we know this. So how do we work with it? We're going to use an example. We're going to take a $300 limit Capital One card. All right? So you got your brand new shiny Capital One card. It's shiny, came in the mail, says platinum or ninja or titanium or asbestos or whatever fancy name of card you just got, right? You open it up, it's got the sticker, you call to activate, you decline the payment protection because they always make you do that. Put a little sticker off the card, maybe sign the back. How exciting. This means I can spend $300, right? Wrong. That might be what you thought when you got your first card as an 18-year-old. I just got approved for a $300 card. That means I can go out and spend $300, right? Wrong. This card's going to be a tool, simply a tool to maximize your point potential. Just like a hammer is a tool to nail a nail into the wall or to open a window or to take care of somebody you don't like. That credit card is just a tool to add points to your score so that you can get your real goal, which is home ownership. All right, so how do we use our tool? How do we use our tool? Jared, how do we use our tool? How do we use our tool? Like this. How many of you have Netflix? Or how many of you, let me ask, how many of you have Hulu? How about Disney Plus, Dollar Shave Club? Something that you subscribe to, iTunes, every month, Spotify, every month. That is between a $3 and a $9 cost every month, and you have to set it up on a credit card. How many of you got something like that? And by the way, if you don't, go get one. I'll wait. All right, you're back. So you're going to take your monthly Hulu, your Netflix, your $3 to $9 spend, and you're going to set it up on your new, Capital One $300 limit, titanium or platinum or asbestos, whatever it is, card. You're going to set it up so it bills onto that card every single month. Bam! Now you're going to log into the Capital One app. Ooh, it's got Score Sense. Okay, we'll talk about that in a later time. We're going to log into the Capital One app, and you see your card in there, and you have the ability to enter in auto pay. And you're going to enter auto pay, but I don't like auto pay, and I don't care. You want a house. You're going to enter in your auto pay, your checking account, routing, whatever, blah, blah, blah. And you're going to set it up to pay that card in full when it's due. You don't got to get fancy. You don't have to say, oh, what about the payment cycle closed? You don't have to get fancy. You're going to set your checking to auto pay that card when it's due. So we got our Netflix on there. My Netflix is $6.99. So the month starts out, and all of a sudden, bam, Netflix hits that $300 limit Capital One card. Now that's activity. You get points for activity. How many points are you going to get? I don't know. How much is the activity? Well, it's between 1% and 3% utilization on the card, 1% to 3% of the limit. So you're maximizing the point potential there. So how many points are you going to get? The max in the FICO algorithm. Now that $6.99, that stays on that card until the due date for the card. And all of a sudden, bam, auto pay kicks in, right? And it pays it off. Well, that shows the ability and willingness to repay in a timely fashion. And you get points for that. And then next month it happens again. Boom, spend. I'm throwing something else here though. Boom, trended average daily balance. Oh yes, FICO in the 3 newest incarnations uses your trended average daily balance to help calculate your score. It's why you can't charge it up and pay it down, because they're privy to that. They're wise to you. You can't trick them. So month starts off, nothing out of the card. All of a sudden, bam, Netflix hits. That's activity. You get points for activity. How many points are you going to get? I don't know. How much was the activity? 1% to 3%. You're getting the maximum points in the FICO algorithm. Now that money, that $3.99 balance, that stays on the card until the due date. And what does that create? A trended average daily balance. And you get points for your trended average daily balance. How many points are you going to get? I don't know. What's my trended average daily balance? It's 1% to 3%. So you're getting the max points possible. And then the billing cycle close date comes and the due date for the bill comes, and bam, your checking automatically pays it on time, pays it off. And that shows the ability and willingness to repay in a timely fashion. And that happens again next month. Activity, average daily balance payment. And again, activity, average daily balance payment. Activity, average daily balance payment. Points, 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 points. And what are you doing? You're kicking back. You're watching the newest the newest season of Stranger Things or Mystery Science Theater 3000 on Netflix, and you're maximizing your point potential. This thing is the credit machine. It's happening automatic. It's the credit machine, and this baby's on autopilot. What do you do with the card after that? You cut the damn thing up. Stick in your underwear drawer. Do not carry it with you, because it is way too easy to justify using it, and you can't justify using it if you don't have it with you. Can't I use it for gasoline and for points? No, not if your goal is home ownership, damn it. Listen to what I have to say. I put tens of thousands of people into homes because they listen to this. You're listening to it now. Please follow this. So Jeremy, you said 2 revolving accounts though, right? What do I do with the other one? The exact same thing. So now we got 2 credit cards. One's got Netflix, one's got Dollar Shave Club, whatever. Activity, average daily balance payment, activity. They're simply tools to add points to your score. Jeremy, I don't have an installment loan. What do I do? Well, for that, I recommend something called Self. Self is an installment savings account. You pledge an amount of money to the bank. You make equal monthly installment payments until that's paid off. And when it's done, they give you your money. But because you made monthly installment payments to a $500, $1,000, whatever you pick bank obligation, while you're saving money for a rainy day, they report it to Equifax, Experian, TransUnion as installment payments on that 500 or that $1,000 bank obligation. That rounds out your profile. It raises your score while you're tucking money away for that down payment. It's a win. You want to get to that? Just go tinyurl/get GET self SELF. tinyurl/get self. I made a tiny URL for it because I could never remember the whole long one. All right. So I've taught you how to get the right balance, right? I've taught you how to maximize that point potential. As you follow here in the free credit repair advice group, I'm going to teach you things like factual investigation strategies that will clean up your report. I will teach you things like how to settle debt. We at Credilife will teach you all of these things free of charge in the free credit repair advice group. This is our outreach. This is what we do. But some people say, I don't have the time, or my credit's really messed up, or I tried it and it didn't work, or my God, Jeremy, I don't even know where to start. A lot of people say, it's not the money, guys, it's the credit. I can buy a house, they just won't finance me for one. If that's the case, I want you to go to www. In fact, if you're watching this right now, grab a pen, pause it, whatever. I want you to grab a pen and a piece of paper. I want you to write this down. Let's see if we got pen in my pocket. Now I want you to go to grab a Sharpie, write it on your girlfriend's forehead. I don't care where you put it, but write down www.credilifevip.com. In fact, I'm going to put it in the comments to book a no cost consultation with a Credilife coach to see if Credilife is right for you. Click here. www.credilifevip.com. So if you go to credilifevip.com, you're going to be able to pick a day, an evening, even a Saturday morning that works for you for an initial consultation. There's no cost for the consult because, quite frankly, we haven't done anything yet. What it is, it's to talk about your credit. We're going to ask you questions. Oh, we're going to grill you because we got to find out what's going on. We're going to talk about your credit. We're going to talk about your goals. We're going to talk about your why. We're going to put together that plan and that set of steps and action items. Get you enrolled in the necessary services if needed to get your credit score and your credit profile in position for your home, to get approved for that mortgage, for that new car, to send your kid to college, for whatever your goals are, whatever your why, we can figure that out. www.credilifevip.com. There's no cost for the consultation. It's all about love. I always say we run this thing like an old rave. If everyone, I'm not saying I'm old, I'm not saying I was a raver, but if I was, there was something called PLUR, PLUR, peace, love, understanding, and respect. You are not going to be judged on your credit past. We do this because we care. We do what we do for a living because we care. We run the free credit repair advice group because we care. So if you want to talk to a professional and you're thinking, well, I really do need help, go to credilifevip.com. And if you're like, look, I know I can't afford it, or I talked to them and it wasn't for me, please stay tuned to this. Where you watch this video, learn how to maximize that point potential. We've got videos, live videos, and advice we do for free in the free credit repair advice group that will teach you how to do investigation letters. We've got free investigation professional templates in the file section of the group. We will do what we can. We'll do backflips for you because at the end of the day, I always say this, whenever I do my job right, I've said this for years, you guys. Whenever I do my job right, a kid gets a backyard to play in. I've got 7 kids. This is how I look at the world. Every time I do my job right, a child gets a backyard to play in. They get a table to have Thanksgiving dinner around this year. And next year, the year after, and the year after that, they know who their neighbors are, their friends that live next door. They have a safe place to run out. They're having holidays as the family. These are the memories they're going to look back at. Maybe you're tired of the generational curse. Maybe you're going to be the first person in your family, and uncle, what's his name, and aunt, what's her face, to, oh, yeah, you're never going to do that. You're never going to own a house. You're never going to prove them wrong. Don't listen to that crap. Don't let anyone keep you down. Financial literacy is what this group, the Free Credit Repair Advice Group, is all about. Financial literacy and financial wellness is what Credilife is all about. Cheryl, good to see you. Wonderful to see you here. But if you'd like to have a consultation with Credilife, go to credilifevip.com. But no matter what you do, stay here, stay active in the group, the Free Credit Repair Advice Group. And we can help guide you. We can answer questions. We can help you get your score and profile in position to reach all of your goals with good, compliant, professional, and correct information. Does anyone have any credit questions while I'm here before I wrap things up for the evening? And if you missed this, I am going to do a replay. Cheryl will tell you I haven't been live in a little bit. And Cheryl, we're getting it worked around. We've been so crazy busy. We just signed up and just really sealed a national partnership with Exit Realty. Our Right Way to Real Estate program is off the charts. Oh, Cheryl, yeah, I saw. Cheryl, I'm so stoked for you. I also saw the newest quilt. You guys, Cheryl does the most beautiful and probably the highest level and best quilting I have ever seen in my life. And I'm literally not just saying that. It's insane. If you're into quilting, if you love quilting, if you respect it, you respect the art and the craftsmanship and stuff, you got to talk to her. It's really insane. It's really awesome. All right. So at some point in time, we're going to get back on our regular lives. You're welcome. It's all true. It's all heartfelt. We're getting back in the regular lives. Typically, we do Facebook Live Monday through usually Thursday-ish at 8 Eastern, 7 Central, 6 Mountain, and 5 p.m. Pacific time. My name's Jeremy Deysach, FICO certified Credilife coach, the founder of the Free Credit Repair Advice Group. I thank you for joining me. You're all fantastic, and I wish you all the best. Stay with us, stay active, invite your friends. Don't get to give smashes and likes and I don't know what do all the trendy video people say. Do all the smashy likey things. We'll talk soon. Bye bye.